Good afternoon, everyone. Scott G here. Hope everyone's having a wonderful day. Let me get everything brought up. I actually was just getting off of a phone call, so that's why I am 2 minutes late today. But hopefully everybody's having a great day. Going to show you something pretty cool here in just a minute. Give me 1 second. Got to get caught up here because like I said, I was just running behind. And here we go. All right, so there's a couple of you in here already. You'll probably have a couple more join shortly. Okay, so like normal, we have ES here. And you can kind of see the action we had. In fact, I want to squeeze this in just a little bit. So here's where we're at currently. And one of the first things I want to show you is kind of how we ended up down here. So yesterday, right, we had this nice breakout to end the day. We had this contracting range, which I drew on there for everyone. And then when we got the breakout, boom, we blasted up here, pulled back, and then went right up here and formed this structure level that became important overnight. So this gray area is just this level of structure here. As you can see, price couldn't get through it there, came back, made another attempt, came down, came all the way back up slightly before we opened the day, and again, got right up to the top but couldn't break through. And then we have the sell-off. Now, besides the sell-off, besides the level of structure, we had this little area here, and this was an upward trend line channel is what I'm calling it. The reason I'm calling it a channel is typically, I've told you guys before, there's really no right or wrong way to draw a trend line. Some people use wicks, some people use the bodies, some people, they just kind of guess and just kind of draw through there. It doesn't really matter, right? A trend line, nothing magical about it. There's nothing set in stone about it. It's just really there for a visual, and you should know right around that area, price could bounce if it doesn't break through. But what I did this morning is I drew one off the bottom of these wicks and then off the bottom of most of these bodies to create this channel. And you can see here's where we got the first bounce, clear up to here. Then we came down and we bounced all the way back up to here, and then we got the big drop. All right, so this area, this channel here, which was also, you see how the 200 simple moving average was running right through it? Okay, so this channel was sort of our area of support. Now, we also had, and I drew this in for the room, I'll draw it in right now and then I'll take it back off the screen. We also had our famous M pattern that we were talking about yesterday. You can have M's or W's. Watch this. And really, I want to show you something. It did come all the way down here, but right about here. Okay, there we go. See, we got some new people joining us. Welcome. All right, so here's our M pattern. We were talking about M's and W's and how frequent they are. So once you've determined, hey, we've got this level of structure here, and we made a run at it here, and we made a run at it here, and we reverse. What is the rule? Once we take out the V, so I was asked in the room the other day, what do you mean by the V? This right here. So on the M, it looks like a V. If it's a W, it's an upside down V. So if the points were down here, it would look like an upside down V or a triangle. Okay, but this is what we're talking about when we say the V. Once this is taken out, the bottom, you are highly likely to at least return to the origin of the original move. This is the origin of the original move. Somebody might say, well, why isn't this? Well, because we came up here first, then we came back down, then this is the move right here. This is the move that came up here. So we were highly likely to at least make it down to here. And if we look straight across, we did, right? No problem. Now, today, because we had all sorts of selling pressure, the bears just came in force. We drove through that. Now, actually, if you guys remember, in real time, we actually got down here and bounced on this candle. We got down in this area here and we bounced, if I remember right, kind of back up here. Then we came all the way down through. Okay, so we got a bounce there, and we should have, right? Because that's a pivot, and we have a wick behind there. If I get rid of, let me get rid of this so you can kind of see what's behind there. My thinkorswim just all of a sudden slowed way down. There we go. Okay, so right there we got that wick, and this is also a pivot. And so on this initial move, we got right down in here, and then it bounced back up. Then it came down and it tried again, and I can't remember how many times it took to get through, but then once we got through, man, we came all the way down here. Same thing. Once I remember, I was watching it in real time. Once we got right here, it bounced back up, you know, and I'm trying to remember how high, but it did bounce off of there, and then it came and it pushed through even more. Hey there. Yes, that's right. Hey, Kelsey. Yeah, TOS running slow per usual. So then we got down in here. We came back up and retested from below. Okay. Actually, I take that back. We came down first. Then we came all the way back up here because that's one of the trades I took right there. We got down in here into that zone. And remember, I gave you the numbers in the room. 3111 to 3105. I said I expected to see a bounce there. And look what we got. It actually ends up coming all the way up here, and we're going to talk about that in a second. Well, let's just talk about it right now, and then I'll show you why I knew we were likely to get a bounce down here. Okay, but this was highly probable. Why? Well, first of all, we had this huge move to the downside. Huge. Okay, so at some point, those people want to get paid off, right? The people, you know, especially the people that might have got in late, they want to get paid off. So you know when you get to an area where it should be likely that it will bounce, the odds go up even higher, especially you got this chaotic candle here. You know, this is a pretty good size candle. This is a pretty good size candle. Then we have this huge chaotic candle. Then this went red, and then we finally caught the bounce. This went green. I took it up in here to right under here. And that was a very conservative play. And then what did it do? It reversed down. It tried to come down this way again, and then it came up. And I want to show you this. Look where it stopped. You guys who've been with me for a while, you know what this blue line is. This blue line is the 50% retracement of this entire move down. And look where it stopped to a T. To a T. Look at that. Okay, and I'm talking about these closes on these candles. Okay, the wicks went up through, but look at these closes on these candles. Okay, that line was on my charts well before price ever got up there. You guys probably saw it on some of my charts before price bounced all the way up there. That is exactly 50% of this entire move. And we talk about it. It happens all the time, like 70 to 75% of the time. Once price bounces, it's going to retrace to this 50% level. And then from there, it'll decide what it wants to do. Will it then turn around and go lower, make a lower low? Will it rest and then try to make a higher high? When I talk about higher high, I'm talking about above here. Okay, so right now we're in that resting phase. We don't know. Is it going to come down? Is it going to break up? We haven't kind of determined that yet. But isn't that amazing that it exactly the 50% retracement level? Look at that. 1, 2, 3 in a row. 3 in a row. Let's see. Kelsey says she took profits around 31.33. Okay. which would have been up in here. Yep, up in here. Very nice. Very nice. Great job. Okay, and I wanted to show you before I forget. Okay, why did I have a really good idea that price was going to catch some support in that area? Okay, I want you to look here. Okay, right here, where are we at? 3111, right? See this? Okay, and then this wick goes down to 310575. And then if we come over here, look at this little basing area. You see this? Little rally, base, rally. Okay, not something I'm going to draw in terms of that I think that's a great demand area, but that level of structure combined with what we saw over there, and let me, I want to kind of get right across here, is 3104.89, so basically 3105, right? So this area combined with this, that's where I got that range from, 3111 down to 3105. And if we come back over here, you guys know what already happened. The low on this candle, 310525. Right? Not rocket science. It's not magic either. It's just reading price action. That's all it is. It's just reading price action. So there was no magic or no, there wasn't anything complex. I just looked to the left. That's all I did. I looked to the left. Once this started like kind of breaking through here, then I started in my mind, I'm like, where is a logical place? Where's a logical place? Because at that point, when it broke through here, right, after already making this big of a move down, now you're back down to the origin of the move and it goes below that, well, then you know, man, bears are just super aggressive. They are just pummeling price down. Bulls have stepped out of the way, right? Bulls are like, I don't want no part of this. I'm just going to wait. But then you have to find where's that next logical area where bulls might step in and say, you know what? Okay, here I'm going to try to push it up. Now, you've got bulls waiting. This is what creates a bounce. You have bulls waiting to get back involved, and then you have sellers who are ready to take profits. That's what creates this kind of a bounce, right? Because that's what I was saying when we started this broadcast today, this live stream. When you see this, at some point, they want to get paid off, right? They want to get paid off. So at that same exact time, bulls are like, hey, I'm ready to step in and try to stop this, and that's what drives a bounce like this right here. Okay? Hope that makes sense to everyone. But this, oh my gosh, this has been beautiful today. Beautiful. Other than that one mistake that I made, I told you guys in the room, I thought I was exiting my position, and I actually had hit and actually went short another position when that was way up here, when price was bouncing at the time. And I'm like, I noticed it like right away, and you might have seen on my on the thing I put in there, I was only in it for like 35 seconds because I realized like right away, I'm like, whoa, wait a minute, I was trying to exit, but I'd hit the wrong thing and actually went short another position when I was trying to get out of the position. But luckily I saw it quick enough. Then the bigger drops and then this bounce. So I entered again when we rebroke here, rebroke this channel. Okay, so we came down. Okay, came down here, then we came back all the way up here, and then when we started coming back down, I caught this, a lot of it, not all of it, a lot of it on the way down. Those were two really good trades, and then I caught this bounce right here. And I got out right under here because I was afraid it would bounce against me. And look, it was a good thing I did because it did bounce. It did. It came all the way back down to here before, well, actually it came all the way back down to here before making this run up. I was long gone by then, though. I had a business call I had to take, and that's why I was late. I was just getting off the phone. But It was a good thing. I got out just below this level right here. Once you break through and you come back, support becomes resistance in most cases. And once it touched it, look at that. I mean, right, it touches it and boom, bounces it right back down. But I was out, okay? So for those of you who are trying to learn this and get a feel for like how you should trade, that's one of the reasons I'm conservative. Somebody, and I think it might have been Kelsey, put it in the room earlier today. You know, the reason that I trade the way I do is because I'm trying to eliminate big mistakes. So I take these big moves and I try to take pieces out of it. Take pieces out of it. I don't try to get in up here and get out down here. And I'm going to tell you right now, only about 0.0001% of traders ever catch this to down here. Okay, those who tell you they do, most of them, unless they show you proof, most of them are just lying through their teeth. Because it is next to impossible. It's so hard from a psychological standpoint, right? To catch this all the way down here. Why is it so hard? Because it came down here, and then it did what? Bounced all the way up here. Then it came down here. Then what did it do? It bounced all the way up here. Then it came down, you know, here, and then obviously this was the final bounce. But those people who tell you that they caught it at the absolute top and sold at the absolute bottom, unless they show you proof, don't believe them. All right. Same here. My entry could have been slightly better on the first shorts, but I entered around 31.46. Then again, when it bounced, I felt extremely confident about getting to 31.33. Okay, good job. Know a trader who did, but the thing he didn't explain is he had 15 to 20 other failures because of it. There you go. His R to R was good enough that it didn't matter, but still. Yeah, I mean, so the way I responded in the room was I don't swing for the fences because typically what's going to happen is you're going to get burned. You're going to get burned more often than you actually hit these home runs. That's a grand slam if you can catch it. I've told you guys on these live streams before. I mean, in my entire career, I've only caught like a handful of those. And I want to think that it was because I had pretty good analysis. But even when my analysis is good, it's so much easier to just take chunks and take the conservative route and protect and protect. Don't put yourself at risk, right? Don't put yourself at risk, especially if you're trading options. If you're trading options, these bounces just crush you. They just crush you. You can be heavily in profit and then price bounces and your profit's just gone in a blink of an eye. If you're playing standard contracts, the bounces don't hurt you as much because it's just by the tick. So as long as you were still in profit, I'm just going to make something up. If you entered here, right? If you entered here and then this bounce goes against you to here, you're still in profit from there to there. Okay? So that's the advantage of a standard contract. That's one place where standard contract has a huge advantage over an option, because if you take that same trade with options, you might be really in profit here, and then this bounce to right there, it might eat up all your profit. Now you're back to break even. And you might be like, yeah, but I came from all the way up there. It doesn't matter. Okay, and those of you who play options, you know what I'm talking about. You might still be a little bit in profit, but down here you were way up, and then this bounce goes against you, and just you watch your profit just like whoosh, just disappear. It literally what happened to me at first. I was down 30 at one point, but I trusted my analysis. Yeah, that's exactly what happens. So, and I'm not saying trade, again, I still trade options. I trade them both. But there's pros and cons to each. You obviously have less risk with options, because with options, it's only the amount that you paid for that option, right? So if I'm just making a number up. If you have $100 in an option trade, that's the most you're going to lose. But if you're taking a standard contract, you could lose, a ton more, because every tick that goes against you is negative. Every tick. Where with the option, it can move against you somewhat, and it might not be that dramatic. Okay, especially if you just entered. Like if you just entered here and it went, you know, $2, $3 against you, you might only be down, I'm making this up, but you might only be down, you know, $62, $75, you know, something like that. But if that was a standard contract, you'd be down like $150. So twice as much, because every tick counts against you. Yep, your premium is your max risk. So I know there's a lot of different thoughts, and I see people, and the funny thing is on Twitter, you'll see some people who, I only trade equities, or I only trade lots, or I only trade standard contracts, okay? They're all basically the same, right? Because of the way they move. And then there's other people, I only trade options. I would never trade shares. I would never trade standard contracts or whatever. You got to find what's comfortable for you. I trade both. So anyway, one thing I wanted to cover today, and I put it in the room, is the swing trade on Delta Airlines. And let me go to daily. I want to talk you guys through this again. I don't know if anybody in the room ended up taking it or not, but it worked out beautifully. All right, so I wanted to show you guys again what I saw. Okay, what led me to recommend this as a trade idea the other day, and I took this myself, but I got out yesterday. You see this bounce here? When this started to bounce yesterday, I just went ahead and exited for good profit, but I exited. But right here, we went inside, outside, okay, basically bouncing off the 20, inside, and then we never could take the top out here, but we did take out the bottom. It doesn't matter that it closed in here. Okay, so that told me, and we were in a downtrend, and momentum was down. See all these factors I'm putting together? We were in a downtrend, momentum was down, we had bounced off of the 20, we had went inside, outside, inside, and then took the bottom out. Now again, but we couldn't take the top out. Put all that together, plus there was negative news. Let me draw a line here. If I can get my cursor to work. There we go. Okay, plus there was negative news on airlines, right? The increase in coronavirus is obviously potentially very troubling to the airline industry. You guys saw what happened the first time that it spiked. I mean, it pretty much just shut them down. So right here was the trigger, taking out the bottom of this. Now this was a swing trade. We're on a daily chart. See this up here? And let me, maybe I can make this a little bit bigger for you guys so you can see it a little bit better. There you go. Okay, this is the daily chart. So this was a swing trade setup. Okay, so once we took this out there, there's your entry. And then here was yesterday. Okay, yesterday we were down here, then we came back up, but you notice we never went all the way back up. Okay, now I did exit when it started back up because I was in profit, and I'm like, oh, I'm going to go ahead and get out. But then look what happened today. So at one point today, out of the money puts on DAL from just a couple of days ago, we're up 250 to 300% depending on where you exited. 250 to 300%. So if you were a swing trader, this was a beautiful swing trade. And I have this line drawn here because you can see we have a gap here, and that was more a visual representation of knowing more than likely you're not going to get through this on the first attempt. You're not going to get through this when you get down there. So that was more or less a visual representation. But it may go lower. I mean, it may come on down here tomorrow. But it was an option trade, and remember what I said about options, and you guys who trade options, you already know this. Thursdays and Fridays of the same week expiration are when your premium burns the fastest. So the closer you get to expiration, the faster the premium burns. So unless it's going in your favor in a strong fashion, I was playing Friday expiration, I typically want to be out on Wednesday. Typically. Now, if there was some reason, like say yesterday, this ended up as a doji or maybe even still red, I probably would have held. I probably would have held again. Okay, but today it made a nice move to the downside. It got as low as 25.22 today before it caught a little bit of a bounce. It's at 25.71 now. When I entered this, let's see, I can tell you. It was up, it was actually slightly higher than that. I think I entered somewhere around the 27.30s, 27.40, you know, kind of up in that range, because it was right here. It was right at the near the bottom of this. It says low was 27.28, but I know I was in slightly before that. I think I actually, now that I think about it, I think what I had done is I had drawn a line across the bottom of these bodies. Give me 1 second. 27.49. Yeah, I'm sure it was the 27.40s that I entered, which was up here, because this was sort of like a little level of structure. Okay, sort of like a little level of structure there. And then I was able to get out yesterday kind of like right in this area, and then today it went on down even more. So these are the kinds of setups. This is a little bit more, I don't want to say advanced, it's just you've got to understand price action really good to see these kind of patterns. Inside, outside, couldn't get through the 20, inside, broke the bottom side but could not break the top, downtrend, momentum down. So all I did was, I'm basically checking off boxes, right? What is that? That's 4 or 5 different things. And plus, there was news about the coronavirus spiking and how it was going to be potentially damaging to airlines. United Airlines, I think, said they're getting ready to furlough like 36,000 employees because they'd call them back. But now, because of the spike in coronavirus, it's getting bad again. So all of that led me to believe that this was going to continue down. So anyway, I wanted to give everybody sort of my my thinking on that. Let's do this. Let's go look. Let's go back and look at our watch list from today. We'll see if there was any good winners there. We've had a lot of interaction in the room today. That's awesome. That's why it's taken me so long to go back and find the watch list. Here it is. All right, so let's look. Let's look. We're already on the daily. The first one was Baidu. Okay, Baidu. Okay, now Baidu, you could potentially still be in it, but okay, we went this way, right? And then what's the rule? If you go one direction and then come back down through the opening range, you can enter there going the opposite direction. So actually there was 2 potential trades here. We had a hammer. Okay, it was inside and a hammer, which is actually a really good signal. Okay, so it opened up here and it actually went up first. Your trigger was right away because it was a gap up. So that was 134.01 and it went up to 135.44. So that's over $1.40 this direction. And let's just say you cut $1 of that. That's good on Baidu. Then when it comes back down through and it takes out opening price going the other direction, you could enter there. So you could enter at say 134 going the other way, and it's been as low as 130.23. It's almost $4 the other direction. So you could have had 2 winners on Baidu alone just by simply following price action rules. Okay, 2 winners. And the second one, came all the way down here. That would have been great. And obviously you would have looked to exit slightly before that. So good job on Baidu. All right, let's look at the next one. Beyond. I haven't looked at these, so I have no idea whether things won, didn't win, whatever. We're just looking at them together. Okay, so Baidu, here's where it opened up. Your trigger would have been the low of this inside candle, 140.75, and it went as low as 136.50. So that's a $4.25 move before it bounced. So you probably maybe catch $4 or so of that. That's awesome. Look at the candles. Look at the other than this big chaotic candle, $4 move on Beyond, it's going to pay you very well. So there's another winner. Google. Let's take a look at Google. All right, let's see. I missed a bunch of comments there. Sorry, guys. Kelsey, I'll go back and look at ES in just a minute. I'm sorry I missed these comments popping up. Nice call on DAL. Thank you very much. Appreciate that, Steve. Take out opening price, enter, go the opposite direction for momentum shift. Price target, top of the hammer. Actually, probably that wick is better. Okay, we'll go back to ES in just a second. I want to go through some of these on the watch list. All right, Google. That was the next one we were going to look at. All right, let's look at Google. All right, so our trigger would have been right here, 15.11.17, and it's been as high as 15.29.14. So that's almost $12, almost a $12 move on Google, which obviously for Google, 12 bucks is okay, right? I'm sure you'd make money on it, but Google can obviously move a lot more than that. What was the next one? IBB. This is an ETF. IBB. All right, so IBB opened up here. Looks like it tried to go up, then it flushed down. So you could have took this coming back through, which would have been at 141.10, and it went as low as 138.34. So not quite $3. $2. Was that 70 or 64? And 10. Yeah. So like $2.70. That's a good move on IBB. That's a really good move on IBB. So when this popped up and then came back through the range there, you could have caught that down there on that flush low. That is your single candle power reversal right there. That's the definition. You take out one side and you go all the way back through the range and you take out the other side of an inside candle. It can be on any candle, but they tend to work best off of an inside candle. And that's what we had there. All right, so there's another one. Okay, we got J&J coming up next. J&J, let's see here. Okay, it looks like we had another single candle power reversal. We did. Okay, you see it took out both sides. So on the daily, I don't know, and I'm not going to just keep switching back and forth right now, but it doesn't matter which way it went first, right? It doesn't matter. It could have went that way and come back through, or it could have went this way and come back through. Your trigger, well, you could have taken either trigger, whichever direction it was, and then when let's just assume it went this way first and came back through. So you could have took 143.40 up to 144.43, so $1 that way, and then when it reversed, you could have took it right here at 142.75, we'll say, down to 140.58, $2 this way. Okay, so this is another one that would have been a double winner. You could have played it both directions if you understand your price action. So single candle power reversal off of an inside candle. Again, they don't have to be an inside candle. Like here's one. This is not an inside candle, and you had a single candle power reversal. But they do tend to work more reliably off of an inside candle. But they can happen anytime. They can happen anytime. All right, Microsoft, let's go look at it. Let the chart load. Okay, so, well, kind of freaked out on me there. Okay, our trigger, 213.26, and it's been as high as 216.38, over $3. Over $3. Okay, so it actually started up here. Oh, let me take that back. I'm sorry. It actually opened up here. So really, we would have not had a trade unless it would have went the other direction. So this is not a trade. And I don't know that anybody, especially when you see this strength here, I don't know that anybody would have just jumped in and immediately said, oh, I'm going short, just for the heck of it. So I take that back. There was no trade on this one. No trade on Microsoft. It gapped up because here's where it opened. And it just immediately went down, right? Which is bucking the trend here. See this? This bounce right here off of the 20. So there would not have been a trade there. Just want everybody to see that. That would have been a no trade. Okay, Netflix. This one I'm interested to see because, as I put in the notes, we were already at the top of an expanding range. And I have not, like I said, I haven't looked at any of these today. Okay, and look at this. We're actually bucking. What's happening with the market today? The market's going down. Look at Netflix. It flushed down and then it came back up. So your trigger coming back up would have been the top, which is 505.10, and it's been up to 509.63. So that's over $4. Okay, so you could have caught $4 that direction. Okay, could have caught $4 that direction. But look at this, still right here at the top. Again, this line is just a visual, right? It doesn't necessarily mean anything, but we're still right up here at the top. But I would have thought, and again, you know what happens when you assume, I would have thought after this strong move up and then the market being as weak as it is today, I would have thought we would have saw like a big flush off of Netflix. And we didn't get it. We got a little flush and then right back up. So right now, until something changes, we've got some strength, right? Look, nice gradual move to the upside. See the momentum? Just a nice gradual steady climb that's showing strength. So until something changes, you know, don't just take a line and have that be your only indicator. Oh, well, heck, it's at the top of the expanding range. It should go the other direction. That's just one piece of the puzzle. It's just one piece of the puzzle. All right, and we got a Roku. Well, we got a few more. We'll go through all of these. Got Roku here. Good night. I did not see this coming. Look at this. So right here, here's your big winner of the day. 136.50 was your trigger. It's been as high as 149.55. Let me try to do that quick math in my head. That is $13. $13 winner, and it's still up near the top. $13. So here's your inside candle. If you gap up and go the right direction, you're automatically entered. You just enter right away if this is a name that you play a lot. And look at that. Oh my gosh. Again, going so against the market. Market, huge flush. Roku, boom. Maybe they had news today. I don't know. I'm not following Roku that closely, other than I keep it on my watch list, but I'm not following the news. So maybe they had some news, but that's enormous. There's your big winner. I guarantee you that's your big winner of the day. Okay, now we have Place, PLCE. And this is going to be a nice one. All right, so your trigger was 34.83, and it's been as low as 31.82. So that's a $3 move. And look at this candle. This is one of your bigger candles on the screen. Anybody played that, they made bank. That'd be big money on Place, PLCE, Children's Place. Look at this. You just compare it. It's one of the biggest candles on the screen. and $3. You know, here's your typical size candles. Let's look. A typical size candle is not quite, what is that? $1.50, $1.60. That's your typical size candle. Well, just from your trigger, you got a $3 move. So if somebody was playing that one right there, and that was an outside candle, was our setup, we took out the bottom of the outside candle and we got a $3 move. That's nice. That is nice, especially on a 30-something stock. Okay, AMD and ATVI will be our last two. AMD. And I think once we get over to it, AMD might be a nice winner today. Oh yeah, look at that. Had a hammer. So right here's our trigger, 53.47, and it's been as high as 56.80. So what is that, 53, right? 53.47, yep. 56.80, over $3 move on AMD. And again, look at the average size candles. This is the biggest candle on the screen, getting bigger as we're watching it. Look at that, biggest candle on the screen. AMD, somebody made money there because AMD pays well. Doesn't take a huge move on AMD, but that thing is still going. Look at that while we're watching it. While we're watching it. Amazing. Amazing. All right, and then we had one more. It was ATVI. No matter what happens with ATVI, the watch list has been gold today. Other than the no trade on Microsoft, every single one of them have been winners. Some of them you could have played two ways, two directions, meaning you could have played two trades on one play. Oh, there we go. Oh, come on back. Okay, so our trigger, this was another hammer. Our trigger was 79.35, and it's been as high as 80.55. So over $1. Again, look at the size of the candles. That'll tell you whether the move paid off. Okay, this is a pretty normal size candle. Okay, so over $1, right? 79.35 to 80.55. So $1.20 from your trigger. Okay, so everyone except, I think that was Microsoft, wasn't it? Which was a no trade, meaning you wouldn't have entered. There wouldn't have been a trigger at all. Every other one was a winner today. And some of them were big winners, big winners. So that is, that's an awesome watch list today. Okay, so here we are. We're back at ES, and we'll end up with this. Let me close it in just a little bit. Okay, so we broke above. We broke above finally. Remember what we said. Once we get to the 50, we typically either rest, or it can go either direction. Sometimes we'll rest and then we'll drop. Sometimes we'll break through. Well, we broke through, obviously, right there. Now, are we breaking, retesting, and going to go? Or are we breaking and then going to fade? Let me do something here. That is 31, 37.50. I want to do some quick math. Yeah, I see your comment there, Kelsey. Roku always seems to do its own thing. I would say there's a little bit of truth in that. Let me do the quick math here. 3170 minus 3105, 25, and then I got to do 33% minus 3170. Why did that do that on me? I'm sorry, guys. My calculator, I must have punched the wrong button. Obviously, the calculator is not going to make a mistake. Okay, times 33%, 21, 37, 31.48. So 31.48, let me find it. Okay, is right about here. So if price makes it up to here and clears and holds it, about where the 20 is now, 31.4875 is 66% retracement. So you guys know my rules, right? And if you're new, 33% retracement. If you only make it to 33, it's highly likely you're going to come back down and make a new lower low. If you get to the 50, which you're going to do about 70 to 75% of the time, it can go either direction. What you're playing is the odds that it's going to get back to the 50. If you make it all the way to the 66% retracement and you break and hold above it, it's about, I think the statistics say it's about 84 or 85% you're going to make it at least all the way back to the origin of the move. Okay, so that's just a way that helps you play probabilities. It's just one factor, though. Remember that. It's just one factor. You can't just take one thing and say, well, I'm putting it all in because it got to 66% retracement. I wouldn't do that. That wouldn't be smart. But that's just one factor. So basically, if it gets up here, 31.4875, I can draw it in for you. I gotta find it on here. Okay, let me kind of 31, and then I will edit it so it's correct, and you guys will see it on my 31.4875. I'll make it exact for everybody, and then anytime I post a chart the rest of the day, you'll see it on there. Whoops, I want that to be solid and blue. Okay, that's 66%. So if we would get up here and hold above it, break and hold above it, the odds say about 84 to 85% of the time, then you're going to continue on all the way back up to the origin of the move, which would be up in here. All right, something to keep in mind. Just because we broke above the 50 doesn't necessarily mean we're going all the way back up here yet, right? It could turn around and start heading back down, but they say once you clear and hold the 66% level, then the odds go up dramatically. All right. Anybody have any questions? We've been on here about 50 minutes. I'll probably go ahead and just wrap it up. I think we've covered a lot of good stuff today. We saw our M, right? So our M pattern. I showed you the reasons why I kind of thought, that we were going to drop. Okay, obviously you take this out. Then if you break here, you're definitely going to drop, and we were looking to at least make it to this level because that was the origin of the move. And then it did bounce there in real time, but once it broke through, then we were looking down here, and I showed you over to the left based on previous price action why we were looking for a bounce right in here, and we got it. We got the bounce, and then it actually come all the way up here. So it's really, I hope you guys agree with me, it's really that easy. And when I say that easy, I'm not saying that trading is easy. I'm saying that reading price action is much easier than people think. And it's much easier than a lot of these complex strategies where you've got, umpteen different indicators on your chart. And well, if this does this and this does that, and this doesn't cancel that out, then I know that X% of this and blah, 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 and on and on and on. That's hogwash. I'm not saying it's hogwash. I mean, people who understand those complex strategies, they can make money. There's more than one way to make money in the stock market. Don't let anybody tell you that there isn't. And don't let anybody tell you that there's, that maybe their way is the only way. Okay. Are there things that are better than others? Yes, without a doubt. Okay, and that's why, you should do some testing when you have time, especially on the weekends or in the evenings. Do some back testing. A lot of charting software gives you the ability to do that. Test your strategy, if you like indicators, test your indicator, test your patterns. When you see certain patterns, how often do they play out? What kind of risk to reward did they give you? But you can also just Google on YouTube. There's lots of videos where people will test specific strategies. You know, I'm just going to make something up. If you want to see what does the MACD do, type in, you know, test MACD strategy, and it'll bring up videos where people have back tested it. There are certain people out there that's all they do. That's like their thing, is they like to test strategies. Okay, they're more into testing strategies maybe than actually trading them. That's fine, right? Because that helps people who want to know. I've watched lots of videos on bunches of different strategies, and I will say this: there was something interesting. Which one was it? I watched something the other day. Oh, now I can't remember which one it was. It wasn't MACD. I've told you before. I saw that guy's video. There's one of the guys that tests a bunch of different strategies. So far, MACD has been the best indicator by following it by its rules that he's ever tested. It had about a 50% return, and it had a win rate. Don't hold me to this. I know it was right around 60. It was either 60 or 62%. And that was just by strictly following the rules. Like, that was not playing around and not, you know, with really strict trade management and all that kind of stuff. And I've never been a MACD guy myself. I mean, that's made me think, do I want to test it? I'm always price action, supply and demand, support and resistance. But is there a way that you could test something where you take like MACD and, okay, well, if MACD is giving you a signal and you see that I'm making something up, you're at a level of structure, and MACD at the same time is giving you a signal to go short, you know, something like that. You know, testing those kind of things, that's fun for me. I like to do that sometimes in the evenings or on the weekends. But he was testing something the other day. I just can't remember what it was. And it gave about a 60% win rate, but here's what I was going to get to. The amount that it made wasn't anywhere close to like MACD. So both of them had about a 60% win rate generically, but MACD actually on his tests produced like a 50% return. Like, he used a simulated account of like 10 grand and it returned $5,000. All right. The other strategy also won at about 60%, but it only returned 35%, which is still great. But the reason you do all that testing is you're trying to find what's going to give you a higher win rate, give you better risk to reward, right, and protect you. Okay, those are the main three things. Give you a higher win rate, give you better risk to reward ratio, and I can't even remember what the third one was right off the top of my head, but that's why you test, right? Because if you stumble across something, so in the room the other day, I put in there that little post about Jim Simons, the guy who started the Medallion Fund. Renaissance Technologies is actually the hedge fund, and the Medallion Fund is the greatest hedge fund of all time. And it's all run based on mathematical probabilities. And one of the things that he found, and he found it years and years ago, he went completely against what all the big hedge funds of the day were doing. And still, to this day, only a few of them have kind of switched over to like what he does, but they don't know his exact edges, if you're following me. But he was able to do and predict from mathematical probabilities that if they took more, shorter, safer trades, they would make more money in the long run, whereas most hedge funds, most institutions, most banks, most prop desks, they're swing trading weeks, months, and sometimes even years on a position. And what they found, he doesn't hire like stock people, right? You know, like the same kind of people that Merrill Lynch or Goldman Sachs or those kind of people would hire. He hires scientists. Now, he's retired, but when he was running it, scientists, physicists, mathematicians, statisticians, astronomers, and people laugh. And I remember I laughed the first time I saw an interview about that. literally anything that they feel can give them an edge over not only the market, but the competition. But going back years and years ago, they figured out it is a mathematical certainty that it's easier to predict what the market is going to do in a shorter time frame and in smaller increments than it is to do it over a wider or longer time frame in bigger increments. And if you think about it, it totally makes sense. I remember, I think it was him in a different interview. It wasn't the same interview. The interviewer was questioning him, how did you guys come up with that and all that? And he's like, well, a lot of smart people came up with it. But he goes, think about it. It's common sense. It's much easier for me to remember what I did 30 seconds ago or 3 minutes ago or 3 hours ago than it is for me to remember what I did 3 weeks ago, 3 months ago, or 3 years ago. And that was the analogy he gave, right? And it's absolutely true. Okay, it is much easier, you can flip that around to predict what's going to happen 30 seconds from now or 3 minutes from now or 3 hours from now than it would be 3 weeks, 3 months, or 3 years from now. Right? And they've proven it through mathematical modeling. So then the next thing was that although the market has randomness to it, there are repeating patterns. I don't think anybody would deny that there are repeating patterns in the market. But what they were able to do was identify ones that most of us never catch. And that was their edge, and it still is to this day. So we know this M pattern or W patterns happen a lot. Well, the only problem with that, right, we can make money on them, don't get me wrong. But from a big, large scale perspective, the only problem with that is millions of other people know this too. And where they have found edges is when they find repeating patterns that are not as pronounced as this, and maybe they don't even happen quite as often, but when not that many people know about them, it gives them a huge advantage. And so over the years, they were able to determine that an edge was only good until other people caught on. And once millions of people started to trade that same edge, it was no longer effective for them. They would move on to a different one. Now, what will happen is over the course of time, certain edges, people, I'm just going to make this up, some people really like to trade double tops for 10 years, and then for the next 3 or 4 years, they move on to something else. Okay, that's oversimplifying it, but that's what he's getting at, is things go in and out of style. So maybe something that was an edge then wasn't an edge anymore, then it loses favor with people because it's not working as well. Well, then they pick back up on it, and they'll start trading it again until it becomes popular again. So he said his advice was, you want to try to find an edge in the market, you want to try to find repeating patterns, but ideally you want to try to find something that not everybody and their brother trades. So that's why he's considered the most successful investor of all time. That I actually posted the thing in the room from a day or two ago. The Medallion Fund has returned 39% on average after fees for over like 30 years, which is just unheard of. I mean, it's just remarkable, their consistency. And again, they do it by the way I just described. All right, so before we get off, look where we're at. We're trying to break above. Now we need to break and hold above 66%. And if we do, the odds start to go up dramatically that we'll get all the way back up here at some point, maybe not by the end of the day, at some point near the origin of the move. So just keep that in mind. Okay, well, everybody, I am so glad you guys were all here today. We had a nice group. I saw the number kind of going up and down, but we had a nice group today. Hopefully you got some value out of this. I'll see everybody in the room. And if you're new here, obviously give us a thumbs up, subscribe to the channel, and come to our room if you haven't, simpletradinglife.com. Click on the free chat room button, and everything's absolutely free. And hopefully we can help you become a more consistently profitable trader. Have a great day. We'll see you in the room. Bye-bye.